All right, everybody checking in on the playback. Appreciate y'all for watching this. For the people that are here, kind of already know how it goes. Feel free to stop me, ask questions at any point, and we'll get into it. I kind of just want to touch on what's going on with Bitcoin, um, and do more of a risk-based call, just to kind of get everyone on the right mindset. Just in case we do head towards the downside instead of the upside, right? Always good to have that mindset ready. I'll touch on the ITC into the cryptoverse, the Ben Cohen risk dashboard, that if you have the risk taker role inside of the Discord, then and you pitched in and you have access to actually log in and check all this stuff as well. I'll create a separate call slash video to actually show how to use each and every tool that's on here, but just to kind of show some other people that are tapped into the Patreon to see it as well. But all right, so already checked in with everybody. Everybody seems to be doing good. That's good to hear. Let's go ahead and hop into Bitcoin. Um, we always start with Bitcoin just to kind of get an idea of what's going on with the market. We'll go through some of the tools and, like I said, ask any questions as we go. So hide this really quick. All right, so we're looking at Bitcoin on the daily time frame right now. We have our orange line turned on, which is our 20-week moving average. Everyone should know how to turn that on. We have a Fibonacci retracement from this trend that I'm going to point out right here. And that trend is from, I wish this color was different. Let me go ahead and make that a different color really quick, better to see. Boom. So this trend, the Fibonacci is basically trending from this top straight down to here, right? We've kind of been moving sideways, but we haven't put in a higher high over this previous top in December. So that trend is still valid in my opinion, right? We want to see these higher lows continue, which we're getting right now, which is good. So we got our low here back January 22nd. We got our higher low February 22nd. Some more higher lows March 18th, and currently have more higher lows at April 16th, April 17th to where we're at right now, right? So higher lows are always a good thing. And then higher lows compared with higher highs confirms an uptrend, right? So if we look down here, January 22nd, when we put in that actual low, we came in, put in the high, put in the higher low. We failed to make that higher high, but we did make a higher low. Then we did make a higher high, and now we did make a higher low, right? So far, it looks like we're getting back on track on a daily time frame. And again, this yellow line was just indicating the Fibonacci that we have drawn. So let me go and remove that. Now we can look at our fib levels. Again, we're just going from, and highlight it just to make it clear. Going from this, let's make this yellow. We're going from this area up here. And oops, gosh darn it. Let's try that one more time. Oh, did I take everything off? Oh, no, sir. I surely did. There we go. And all right. So now that we're looking at it, we got our high point, we got our low point. We want to keep taking out these Fibonacci retracement levels, right? So we retraced from 69 down to 33. We want to continue taking out these levels. When I say take out these levels, we mean closing above, right? So this first 0.23 fib level, we want to get above it. We did previously, and we got above the 20-week moving average, which was super bullish, but because we failed to hold that 20-week moving average, and then if we even look kind of a little bit closer on these wicks up, we failed to get above it. So we're being suppressed down right now. So even though we do have good market structure from our previous base, because we've continued to make higher lows and we put in a few higher highs, we do need to be super aware that we are facing resistance from about 42. Let's look on here to be a little bit more accurate. So 42,800, the 20-week moving average, to our spot 23, our 0.23 fib retracement level, which is 41,400. So 41,400 to 42,800, we do have a lot of resistance there. And that's something we need to be aware of because that 20-week moving average is a strong point. So if we look at this inefficiency on this drop, let's go ahead and throw a rectangle on. And this rectangle is going to be based off these moves. So we got these candles right here, all the way up to these top candles right there. So if you can see from these top candles here to these bottom candles here, we're just going to run that over. And we're just going to keep that in mind as a box or a level as resistance, right? We need to get above, all the way above it, all the way closing to the top side of our purple box. Until we do that, we're either going to continue moving sideways or hopefully not, or put in a new lower low, right? So we had our lower low, higher low, higher low, higher low, which is great. We don't want to get rejected off this box, something maybe like this that happens, where we continue kind of sideways here. We get rejected off this box and we come down and we put in a new lower low and then, continue to make our lower lows all the way down. So we do not want to see that. So hopefully we will not, but we have to be prepared just in case we do. All right. All right. What could cause some of the negative sentiment going on? Well, obviously everything that's still already been going on, inflation, World War III, scares. Hopefully some of that starts coming to a head, but we do have a lot of people now talking about a recession on the horizon, as well as a food shortage crisis. So those are just some things that we want to be aware of that could, impact price action to the downside. Also, I marked off here, the blue lines are the next Fed meetings. So I marked them off all the way until the end of this year. So this last one is in December, this last one here. So our next Fed meeting is coming up fairly quickly. And if we just go ahead and scroll over a bit, we can see it's in 10 days, right? So usually price action, is the market already priced into these fears that we have going on, or is the market pretty much saying we need to do something about it? And doing something about it could lead to a sell-off, right? So let's go ahead and zoom in. Our key areas to watch, we don't want to see a daily close. We are on daily time frame, so we don't want to see a daily close below 37,600 about. So let's go ahead and put a price bubble on that and mark that off with a line as well. And we'll make this blue line, we'll keep it blue, but we'll just make it way thicker. All right, so that blue line, 37,700, that is what we are watching on the daily. So if we lose that line, then we continue to look to the downside at 35K and then down to 32K. But until that happens, let's keep it more on the positive side. But we do need to be aware of it, right? So really simple so far. Again, do a quick recap as we do our analysis of Bitcoin. We are below our 20-week moving average, which we've always said, anytime below the 20-week moving average is a good time to dollar cost average into your positions. We do need to be aware that if we are heavy into altcoins, losing this 37K level is going to severely impact our altcoins, right? Just like we tried to buy some beginning of April once we got above this 20-week moving average. And then as soon as we closed back below that 42 and then we had a move below 40, I said, wait for the bounce up to 40,500 to 41,000, which would have been that red fib, to get out of those positions and then kind of wait again to see how we play out, right? That's risk management. Those are the small losses we may take to make sure we don't take the bigger losses or to maybe get a better entry into our positions. Okay, so now that we got that covered, again, the next Fed meeting, May 4th, then we got the June 14th one and July 22nd. But really, I'm keeping an eye here to see, can we, before May 4th, are we able to start closing back above that spot 2-3 here? So back above 41,400. Can we get above that? If so, can we then get above our top side box? And then ultimately, we know we have to hold those positions, right? We hold those positions. Also, interestingly enough, we can see on this fib marker, when we did break up, we faced resistance at the 0.328, 0.382, and we just got rejected from there. So super cautious at this time, not deploying a lot of capital, but I am still dollar cost averaging into ones that I think are more risky. I'm more risk on. I'm taking more risk right now, but that's because I have, you know, a portfolio that's just chilling, not doing anything. With my more active portfolio, I'm taking on more risk. So let's talk about that more active portfolio and how I see more. Should we do more risk first or less risk? I guess. Let me see who's on the call. I think we got a more risk takers on the call. So we'll do the more risk list first. And let's go to. All right, so you know I'm in a bunch of different projects, but I don't think that's the smartest move for everyone. Consolidating into a few that you really believe in, or that you can do the research and do the homework to understand the best, in my opinion, is going to get you a little bit further. So let's go ahead and look at CoinMarketCap really quick. And we know there's a bunch of different categories. Categories. I mean, there's more and more added all the time. So like tourism, analytics, move to earn, right? These are all hot trends at the current moment. But I wouldn't necessarily be taking risk into these hot trends if I don't fully understand them, right? So I'm going to speak about the ones that I understand the best. But obviously, you can come in here and you can deploy the same type of idea that I'm going to, you know, put out there to anything that you feel like you understand a little bit better. So for the categories that I understand the best, where are okay. We have, so this is just the main watch list. These are just layer ones. This is, you know, pretty much as safe as you can get, just all the layer ones. So you can get a basket of the layer ones, Algorand, Near, Avalanche, Cardano, Terra, Solana, Ethereum. Most people on this call know that, but for the people maybe watching the playback, this is going to be a safe basket. You could pick 5 out of these and kind of dollar cost average into them if you would like. Obviously, the ones with the higher fully diluted market cap are going to take longer to grow. So if you put, you know, $100 into Near protocol, it will take less time to get to 30 billion than it would take Terra Luna to get to 130 billion, is the idea there. So do be aware of that. All right, so first, more risk side. For me, I think this makes a lot of sense. And again, it's just kind of touching on the things that I've been paying super attention to, right? So the least risky in this more risk 5 asset portfolio would be Phantom. Why Phantom? Because it's in the top 50, right? So it does give us a little bit of security, but it's had shaky news as of recently. They've lost one of their biggest developers in Andre Cronje. The fully diluted value isn't too bad compared to their market cap, so I do like them for that reason. And let's pull up this all-time chart. We can see that it's retraced a good amount. I'm going to pull it up into TradingView as well just to get a better look. But so we can see right here, this first peak run up that it had was around $1.50, between $1 and $1.50. This first peak run up. We had one way back here. Oh, it's not way back here, about a year ago in April of 2021, and it did like a little 2x. But then from that point, it went from 20 cents up to $1, which, you know, more like a 5x, right? And now it's kind of finding support back in this range between that $1.50 and the dollar range. So let's go ahead and pull up FTX over here. FTM, sorry. All right, under 20-week moving average, yes. Look at this downtrend from here to where it currently is. Also, like I said, look at this previous support that it's actually testing that range right now. Let's go ahead and throw in like, boom. That's really nice, that little support level we got. Let's throw on our fib. And our fib, we're taking it from this high point down to this low point, right? Not too hard. We all can do that. So make sure we're taking advantage of these tools. At least for me, they work, you know, fairly well. All right, so from this move down, again, we're below our 20 moving average, which is great. We think we found support right here. So our risk to reward right here is excellent. because, you know, we think we're already bottomed out. So we only see, not only see upside, but the upside potential is much higher. Where are we first going to find resistance? Just like we did with the last one, right? We got the 20-week moving average and we got our 0.23. So let's go ahead and draw a box in between that range. Do we have any confluence? Not too much, as I would normally draw this box right up here to go with that drop. But we can take that spot first because obviously we got to get to this spot before we can get to the next spot. So we're going to pay attention more to this current purple box. And I would actually move this up just a little bit to match that 20-week moving average. We need to get above that 20-week moving average. But as you can see with this inefficiency, that is a move that I would expect to happen. So let's go ahead and throw a ruler from here to here. 60%, and on the bottom side, 46. So, you know, 45 to 55% move if Bitcoin turns bullish. I see with Phantom, which is pretty good upside. Let's say we do get all the way back to our 0.618. We got a 130% move. So this is realistically what I could see happening. But even more so, I would say a move from closer to about this range. So more of a 70% move up to 70 to 90% if Bitcoin turns back bullish. So bullish case from Phantom, we all pretty much know what Phantom is. And if it turns around right now, it's been down on this downtrend, also at support, important fib levels to bounce up to are concurrent with the 20-week moving average. It makes a lot of sense to me on the more riskier side. So that's your least risk in your more risk portfolio. And let's go back. Uh-oh. There we go. More risk. Next is Immutable X. Immutable X is a layer 2 protocol that basically is trying to make NFTs available to mass markets very easily, very cheap and accessible. Gary V is on the board of Immutable X. They also use a specific technology. It's evading me the term that the technology that they use right now, but it's they created it, so proprietary to them. Let's pull up the IMX chart. The only thing uh-oh, sorry, my crabs. Time to restart the crabs. The only thing I kind of weary about with IMX is that their token unlocks and their token schedule isn't the best. So that's something that we would have to be aware of in regards to that. Jordan says you're already in here and you're coming in again. I don't know what's going on, but I accepted it.
Yeah, I'm just coming off my phone into my computer.
Oh, I see what you're doing. See, I don't know what you got going on. All right, so same type of idea. It's been trending down now. This chart is on Coinbase, so it doesn't have all the data that we would like to see, but we'll, you know, we got to work with what we got. Same type of idea that, let's go down to the 4 hour, $2.82. The 20-week moving average is about $2.82. So right here, same spot. That's going to be our target to look to. With IMX, maybe I would wait to see if we can retest this bottom side around $1.50. Obviously, with all of these, we need to wait to see what's up with Bitcoin, but in specifics, the area I would want to watch is $1.53 to $1.15. But if the $1.53 gives away, if $1.50 breaks, then most likely we will test that 120, 115 side. So do be aware of that. But again, the upside here, 60% to 70%. And that's not even going to the 0.618. That's just going to the pretty much where the 20-week moving average confluence area would be. So another 70% gain. And again, this is assuming Bitcoin turns bullish. So these gains would happen within a few weeks time, right? Like, so for example, let's really quick go back to our Bitcoin chart, and we have that Fed meeting coming up on the 3rd. And say everyone is scared that they're going to increase rates by 100 basis points, and they only increase rates by 25 or 50. right? That could be some type of dovish or bullish price action for the crypto asset class. So do be aware of that. So IMX was the number 2. And if you know what it does, I've used it, I've dug into it, I've looked into who the founders and creators were. I think it's a good play. Now, more of a long term, right? I would expect this to do well over time, but even still, you see the bounce back is already 70%. So, okay, keep going here. UltraUS. So this is going into my gaming side. They are kind of, if you know what Steam is, it's pretty much like a marketplace for games and game makers, but it's going to be for the blockchain. Fully diluted value is under 1 billion. They're at about 28 to 30% of their fully diluted unlock. Their token unlock schedule isn't too severe where people are going to be dumping nonstop. So that's important to me. And let's see if we can pull up a chart of it. UltraUS, here we go. Again, it looks really good to me because it's currently under that 20-week moving average. I mean, I don't know. I always say it, but as I'm about to say it, I'm like, do I need to say this again? But, you know, we dollar cost average when we're under that 20-week moving average, right? So that would have gave us 90 days. So over the past 3 months, we would have been able to average into this. And then if we get the price action that we want, let's throw our fib on. From this current trend, remember the trend is from here to here, right? You can see the dotted line. That was the trend down. It's trying to break it into an uptrend with higher lows, but we just came in and put in a lower low. So that we failed to break above our 20-week moving average. Let's go ahead and throw a little bit of support that we see down here. So we do have our blue line of support. We can actually move that up to here, depending, right? Because so we have this top side that we broke through. So now that top side acts as support, as we can see indicated right here. But there's also these few levels where we bounced here, and during this run up, we held it as support with the help of the 20-week moving average. So, you know, you have to kind of use your best judgment in these type of cases, but either spot really works. So for this one, maybe we wait to see if Bitcoin does break to the downside and we come down and we try to buy around that 72-cent mark. And if we can wait to get in there, well, we'll actually just do it from here, see what we get. We got about a 37% move to the upside. And then look where our next targets would be at that 0.618, where we failed to break above here, and we still have that entire range to go clean. When I say that range to go clean, meaning that it's an inefficiency, right? We drop down there, we have to come back and fill that area. We tried on this move, but we failed, ultimately not being able to get it above the 0.382. So Bitcoin goes back bullish. We get back at least to the 382, 57% move. And if we can reclaim those prior test highs, 103% move. Also, again, this has strong fundamental backgrounds in my opinion. And again, the Bitcoin disclaimer, everything does still run on Bitcoin. All right, so going from there, Crabato, which we've talked about very, 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 very often. I really like the project. The team continues to deliver. Obviously, with Bitcoin kind of trending down, it hasn't been doing the best, but I'm super bullish on Crabato long term. They have a few updates coming with the swimmer network as well as the battle game. If they get guilds to enter into their project where people are trying to hire others, right? So a gaming guild could be made up of, let's say there's 5 people that run the gaming guild and they onboard players to play whatever game the guild is going to be trying to get yield from at that time. So if this catches on and people like to play the battle game and big guild gamers come into it, then we could see onboarding of hundreds of different guild players that are playing nonstop, which is obviously going to increase the price appreciation. So super bullish on Crabato. And let's go to our last one in the more risk side. And that's Altura. Altura uses like NFT technology. This one I've just seen, I 10x'd it. It went from about 4 cents to 40 cents, and I was able to catch that move, and it was great. Nothing has changed within the technology or within the protocol. It's just the sentiment of the market. So I'm still pretty bullish on Altura, and I keep clicking on these and I don't mean to. And meant to go here and see if I can find it. There we go. Not as much data on Altura. Goes fib. This was at 40 cents run up. Doesn't go back far enough. It doesn't look like. Gate IO. I don't know how accurate this chart is actually. I wish we had more data on this chart, but we'll go with what we got. And if we can get back to the 20-week moving average, we get a 60% move. And if we can get back to our first fib level, we get 130% move. So a lot of upside that I see with Altura. I think it's a buy. Anything under 5 cents to me is a buy. I would open a position and then just dollar cost from there. When it does get action, it tends to gain a crazy amount of action. Okay, so now that we have the list, how do we want to allocate? If you know, speaking in terms of, for me, I would allocate in this way. I would do 2,000. If I had $5,000, right, I would do 2,000 into Phantom, 1,000 into Mutable X, 1,000 into Ultra, and then I would split maybe 15, or no, so what's that, 3,000, 2,000 left. I would split this maybe 1,000 in Crabato, 500 into Altura, right? What one is the most risk is most likely Altura and Crabato, because Crabato is based on an individual game, and if that individual game doesn't do well, then you know we could see what happens there. And Altura, just because it's the lowest market cap, has the most risk. The ones that I think are safer, again, Immutable X and Phantom. I would go a little bit heavier into Phantom to keep yourself safe. If you're not worried about, in regards to your safety, that came out wrong, not worried about your safety, right? If you're not worried about which asset, if you just want to get a basket of assets that could possibly 5x, 3 to 5x, this would be my basket right here. You put 1,000 into each and see how that plays out, or you could structure it broken down into Phantom because it's less risk, all the way down to Altura because it's more risk. So,
quick question.
Yes, sir.
So, like, I know you just said basket, but I always hear like bag. So, what is a bag considered in crypto?
Well, people just, I think that's more like a slang term, like, oh, I just grabbed a bag of Phantom. I just grabbed a bag of Altura, right? So a bag is different, right? What's your bag or someone else's bag? yours might be, oh, I grabbed 100, that's your bag. Somebody else might grab 10,000 and that's their bag. So, you know.
Okay. Yeah. I just didn't know if it was like a certain amount or something, like, oh, I got a bag, I mean I got this amount. I got you.
Nah, yeah, people always be like, oh, my bags are packed, ready for the move. But you know. All right, so
AJ, quick question. Do you have a means of where maybe you use like an Excel spreadsheet or something like that, where let's say, for example, you got a dollar amount, you know, you got it spread up into individual tokens. So it's like, so you got your portfolio set, but then you also got like a cash account, you know, with like some stable coin in there. And I'm just trying to understand the concept of when my portfolio gets a certain percentage in one asset, that's when it's time for me to, you know, start taking profit and putting that cash into the cash account, so that everything is kind of driven by if my portfolio is driven by my portfolio balance. You know, if it's too high in one, then I need to shift funds to the other.
Yep, that's rebalancing. So the way I do my rebalancing is based off my charts, right? So if I am in oh wait, I don't want to show you that one yet. This one, so Phantom. So if I'm in Phantom and I know, let's say, well, first things first, right? What's the king? Bitcoin. We got to know what Bitcoin's doing. So let's say Bitcoin happens to, let's change this. Let's change this. So let's say Bitcoin happens to come down here, test, and then it gets above this 20-week moving average. And the next Fed meeting, everyone's kind of scared waiting for this Fed meeting, and it's good news. And Bitcoin tends to go like up to here and kind of chill out for a second. Well, then that's bullish. I know that my alts are most likely going to have moved as well. So if that happens, then I can check here. and I can have my kind of take profit levels already marked off, right? So if I have 2,500 into Phantom, and this Phantom move does happen, and we get this move up to 70, 80%, 90%, almost double my money, well, then I definitely want to take a little bit of profit off to the side. And you have to, that's where your risk understanding of Bitcoin comes in, right? So you're looking at Bitcoin, you think Bitcoin is, look at the market structure. Is it still in a upward market structure? Has there been any red flags to come out that make you think we're going to lose it, right? As long as we're above the 20-week moving average, then for Bitcoin especially, then usually the market is going to start to pump as well. So in this specific case, right, say I have 2,500 in the Phantom, it pumps up, it turns into almost 5,000. Maybe I take out 20 to 15 to 20% and put it in stables on the side. If you're getting multiples, right, if you go up 50%, maybe you take out 5. You go up 100%, maybe you take out 10 to 20. That's kind of how I do it. I take it out as I'm going up on the way up. So then that way I'm kind of chilling, and usually I'll put it up in the stables and then try to earn yield somewhere, wherever that may be. So hopefully did that answer kind of where you're going for? So the target for this one for my take profit would be at, let's say, $2. If we get up to $2 and I put in 2,500, and now my 2,500 is sitting at 4,500, maybe I take out 500, maybe I take out 800, maybe I take out 1,000, right? Figure out some type of percentage that you can take. And then you still have a bag, right, Jordan? You still have a bag in there in case it continues to go up, as you would expect it to do, right? It's not, if the market turns back bullish, then we're going to be looking at new all-time highs. But if you take out some, just mark off your levels. You can mark them off with fib levels. You can mark them off with your confluence levels, right? You can use your areas of, I just blanked on the word, inefficiencies, right? Let's go through here. Oops.
So if I'm kind of tracking it on the spreadsheet, it'd be in my best interest to, when it comes to rebalancing, find out like what percentage of a gain that I get, and then like whatever, like say for example, Phantom, like, okay, I know when my Phantom hits, you know, a 2x, I'm gonna pull out this percentage and transition that and shift that over to something else. It's just that I got to know what my percentages are.
Exactly, right? So just like how we were saying, when you're looking at your portfolio should be based off of a percentage basis, right? So like in this case, if Phantom, if you have a $5,000 portfolio and Phantom is making up 50% of that with 2,500, right? And let's say Phantom goes up to, let's say just randomly, Phantom is the only one that moves out of your whole portfolio, and Phantom goes up 100%, and now Phantom is worth 5,000, and your entire portfolio is, or wait, how would that be? So Phantom, because you had 2,500 in, it goes up by 5, you gain $5,000. So it does a 2x. And now Phantom is sitting at like 70% of your portfolio. Well, you would want to rebalance down. You would want to take 20% of that out into stables or wherever you want to take it and put it back. So Phantom was only 50% of that move, because that's where it was already sitting at, right? That's what you were comfortable with.
Gotcha.
Vice versa, let's say that you have, you know, Altura is only, what's 500 out of 5,000. So Altura is 10% of your portfolio, and now Altura does a 10x, right? And now Altura is sitting at like 80% or 50 or 60% of your portfolio. Well, you know, that's more of a high risk asset. You don't want a high risk asset to continually sit at that level of your entire portfolio amount. So it's time to restructure, right? So, okay, let me sell off 50% of my total Altura current holdings, right? If it did a 10x and it went from being 500 to 5,000, then you sell down all the way back to where you're only holding now, let's say 1,500, right? Because you don't need to be, your entire portfolio doesn't need to be made up of Altura.
Right.
And then you keep those stables on the side for when we come back to test the 20-week moving average. And then you can deploy some on that test of the 20-week moving average. And then if we fail on that 20-week moving average, you still have some stables on the side because you're not constantly deploying. Instead of constantly deploying the capital during an uptrend, you're constantly putting capital to the side during the uptrend, and you're deploying on the downtrend. So that's how we want to, work it out.
Gotcha. Okay. Yep. I got you now. Do you know of any resources? So I don't have to reinvent the wheel as far as like an Excel spreadsheet? Like,
Yeah, I mean, you could.
I have a Google sheet somewhere out there on the crypto portfolio.
Well, you can like I've used this before, like for CoinGecko, like you can just use this right here. I mean, I don't know if you want specifically for an Excel, then I could, do some quick searching and ask some people and see, but this is also not bad, right? So let's just do a kind of a fake one right now. Okay, so we have, we got 1 Bitcoin. Let's say we got 2 Ethereum. Let's say we got 3 Solana and 4 Luna. 1 more Cardano. We got 1 Cardano. All right, so say this is your portfolio here, allocations. So usually it shows in a circle. I thought it was going to give me like one of those pie charts, but it doesn't look like
This don't all necessarily have to be tied to a single wallet, does it?
Well, no, if it's inside CoinMarketCap, you can just create a portfolio. So it doesn't even have your wallet tied in here. It would just be you. This would basically be you taking your data from your Excel sheet and just putting it into a create portfolio, putting the data in here, and then it'll give you your breakdowns like this, right? Now let's say these were all way more equal. I kind of messed up. I should have done them. I should have made them all equal. Let's redo this real quick. Creating portfolio. We go into this portfolio, add new. Can we delete this one, possibly? It's weird you can't delete it, but.
What if you click that more button next to where it says add new? To the right? Oh, never mind.
Yeah, that's weird. But either way. Damn it.
Hey, but Barry, though, if you kind of do want to be able to look at multiple wallets that you do have, you can just use like something like CoinStats, and it can kind of give you multiple wallets you can see at one time too. That's another option, but I know a certain wallet you can see too.
Okay, appreciate it, Jordan.
I'm just trying to make this look closer up here on the recalculating side. So, okay, Luna, Solana, Cardano. See, they're all evenly balanced, right?
Mm-hmm.
So Sol is 35% of your portfolio, Luna's 32%, Cardano's 31%. Now, if for some reason Cardano just does a 10x out of nowhere, and the others haven't moved as much, now Cardano is going to move up to being like 70 to 80% of your portfolio of the total amount, right? So that's where you would reallocate. So if Cardano does a 10x and now it's sitting at 70, 80% of your entire portfolio, then it's time to take profits and rebalance and make it so, okay, each one is now 30% again, right?
Mm-hmm.
And then, using little software like that might make it easier with the visualization of it.
Gotcha. Okay.
And then, so you would mark, so if you're wondering like, okay, how do I take profits, or where do I take profits? How do I take profits, or where do I take profits? Well, that's a big indicator. If something goes up and it's X amount of your portfolio. And, I learned the hard way with that, right? Like I had some NFTs that went up so big that they were like a large part of my portfolio. And instead of like selling into those and kind of distributing it, I didn't do that. And I came back to bite me. So it is something that we definitely got to practice more. All right. Now we'll get really quick. We'll go through the less risk one. It's not as interesting anyway, because it's mostly coins that we all know about. Now, also, why we say this, this is a good point. If you're always chasing the trend, you're never going to be ready for when the trend catches you, right? If you're on, let's say, Near Protocol, you're on Chainlink, you're on AAVE, and you're on synthetics, and you're like, okay, I'm on two or three DeFi protocols and 2 layer ones. and then like a new protocol pops up on Avalanche, and then a new one comes out on Phantom, and the new one comes out on, whatever the case may be, and you're trying to, all right, well, let me allocate some money over there, and you're constantly taking away from your base. Like if this is your 5 base portfolio crypto assets, and you're constantly taking money away from them by not putting money into them, then when the wave comes for your turn, for your base, you're going to miss it. So I just wanted to give that little caveat as we go through these. These are safer plays, but this is a less risk portfolio, but it still could have a good upside, right? So Ethereum, obviously most of us know that. Near Protocol, another layer 1, most of us know that. Chainlink, Oracle Service, most of us know that. AAVE, DeFi protocol, and Synthetics DeFi protocol. So really, these are safer to dollar cost average into. You can see the fully diluted market caps of all of these are over $1 billion. So you're not going to have as big of a home run, but you can still have solid gains while minimizing your downside. Compared to like something like Altura, Crabato, Ultra, these protocols compared to those, way less risk, right? And they've been around longer and been proven a little bit longer. So I'll pull up the charts really quick. We'll do ETH, AAVE, I think I already marked them off. Okay, so let's do ETH really quick. ETH 20-week moving average. We got our downtrend right here. That's going to be our fib retracement, right, from this top till we started trending down to this bottom. Just like most of the other things we see, once we bottomed out, we try to continue to make higher lows, which here's the low, here's a higher low. This one kind of got broken, but we did bounce back and put in a new higher low. So we have a lot of safety right now, all the way down to about 2,500 on a daily closing basis. It did just get rejected off that 20-week moving average. So do be aware of that. Where the key indicator spot I would want to be looking out for is to see if we go back to around that 25. On the pause, if we get a pause at around 27, 28, then that could be a good indication to buy. But I would have limit orders set around the 25.50 area just in case we get that wick down there. And then anything, continually be below that, I'm dollar cost averaging into. Let's go. So ETH, we already kind of know what's up. The dollar amount we want to be watching is 2,500 to see if that breaks or if that holds. Looking at NEAR, I'm not the biggest NEAR fan, but I do think there's upside in NEAR. I just think that we have to be kind of smart with our entry here. Let's look where the 618 is from this trend, from this top to this bottom. Let's see where the 618 retracement is. Throw this on there. And I figured we were pretty close to it. Let's actually zoom in a little bit more. All right, this 0.618 is this green line here. You can see we've been dancing and playing around it. We still currently are. The spot we want to watch here, the price spot we want to watch here, is this 20-week moving average, 1258. What would be lovely is if Bitcoin did kind of take a downturn, but specifically to this protocol, to NEAR. Bitcoin takes a downturn, we come down and we test this 20-week moving average, and everyone's able to get their entry that want to enter NEAR. Nice little 15% discount. We hold that 20-week moving average and we continue to the upside and we take out this prior high. If that does happen, then we would be in what we call price discovery mode. So all of this yellow line you see right now, all that area between this blue and this gray is called price discovery, which would be pretty awesome. It's always great to enter something on the 20-week moving average and ride it all the way up to price discovery. So, kind of wishful thinking. Let's see what happened there. A move back to the prior high, 57%. A movement to the top of the price discovery is around 120%. So that's pretty darn good, I would say. But look into NEAR more, find out if you really like it. I used it and I didn't actually like it. So I'm not super heavily invested in it, but it doesn't mean it's not a good opportunity, right? So, okay. And just for the upside really quick, if Ethereum came back and tested that 28, what level we'll be looking at? I'd most likely be the 0.618. And on a percentage wise, even from where it is right this second, about 30%. And 60% back to all-time highs. So this is what I mean when I say that, this is less risk and you get less reward, right? But you won't be as sick on the drop downs. So let's go back through Chainlink, AAVE, SNX, and AAVE and SNX are really synthetics. I really wanted to show you. So first, let's knock Chainlink out of the way. Below the 20-week moving average, great. This crazy trend down. This is actually a huge bounce. This is a nice bounce, but continue to go down. If we throw the fib on all the way from our top, because we're still trending in a downways trend. Man, Chainlink got some work to do. This is when you see that 20-week moving average right there with one of your fib levels. I mean, that's a pretty big resistance. And then you've already seen it got rejected once here and got rejected once there. It's pretty much the same exact levels. Hopefully third time will be the charm, but that does have some work to do. If it gets up to there, it's a 30% move. If it gets back to that 0.618, we got over 100% move. There is a lot of area that needs to be filled. All this area needs to be filled, right? Because we have this inefficiency right there. So we could see that, but before we get there, we got heavy turbulence to try to get above this. If we do get above that, I would say that is a great sign, and I would actually think that we would probably move back up and test this, this top side up there. So that's why I think Chainlink. I always think Chainlink is undervalued. Their token unlock is kind of not the best because the way that Chainlink runs their token unlocks, they like automatically sell them to put into new projects that they're trying to fund. So that is something to be aware of. That's why there's usually a good amount of sell pressure on Chainlink. But again, I think it's a great dollar cost averaging project. I think if it can get above its 20 moving average, it has high upside to around $32. Actually, to around the $27 to $32 range. So less risk, more reward. AAVE. I've been waiting for these DeFi protocols to take off for a while. There was on the DeFi Pulse Index chart, there was a golden cross a while back. Nothing really came out of it. I was hoping there would be movement there, but there really wasn't. If we throw on our fib, ever since our highs back in May of 21, so almost a year ago, we've been doing nothing but lower lows. Well, I mean, low here, low here, low here, low here, right? So it's lower, lower, lower. So clear downtrend. Make it even more clear by throwing one of these on. All right, pull up this object tree and move that for a second. So clearly straight downtrend. Okay, we did test it, which was great. But what I really, when we broke above this 20 week, it was the first time in a while. I got a little bit excited for it, but we haven't held the 20 week yet. We came back to the below it, but we're still kind of in the middle of a battle, right? We're on a daily time frame. The key area to watch right now, in my opinion, as far as like price action goes, is right around here. If we can hold this 152 where all these ones were, where all these days were chilling, that's a good sign. If we can hold 152, get a bounce and get back above the 20-week moving average around 178, then we could see continued upside at very minimum, obviously just to right here, which is still 40 to 50% move. But then on the upside, we could see a move back towards about here, almost a 2x, so 80%. I have faith in AAVE. It's one of the bigger platforms, and when we look at, if you go to DeFi Llama, you can see that AAVE is extremely high TVL, total value locked, for one of the more known and trusted protocols. I think they need a little bit of more innovation to come in, but they're constantly doing things on the background and working with Bancor. So we'll see how that plays out. In the safer risk asset, I think it would work out very well. So we have Ethereum, near Chainlink, AAVE, and then the last one is SNX. And again, this is for less risk. Still, obviously, we'll have good upside, but less risk. SNX, I think this one could do well, and is actually shaping up to do well more on the soonish side than the later side, which is, you know, always a positive. People want to see their gains sooner rather than later. Obviously, we've been in this humongous downtrend for a very long time, but you can see it does seem that we bottomed out. 1, 2, 3 taps to the bottom here. We could even make that a little bit lower down to this previous low if we wanted, but I think it's okay how it is. Okay, so why, you know, I'm sure most of you guys could shout out why I would say that this could happen more on the sooner side, right? We broke that 20 week, we came back, and we're trying to hold it, and we just got these 2 huge days where we held it, we came back down, and we just held, we're holding it again currently. The price area to watch is about right here, 357, but it's also where it currently is. So this one, I'm gonna actually say the there would be a few areas that you would want to watch, because we also have where it currently is around $5, that 20-week moving average, $5.11. If it tests back to there and it holds it, the upside is tremendous. And the upside, if it does, even from where it's at right now, a minimum 57 minimum, but I would say closer probably to these highs around 80 to 90%. And then if it can get back above those, we're looking at testing this previous local high at 170%. So I really like SNX. And then because this is a less risk portfolio, it's really up to you how you want to structure it, but you can structure it the same way where you got, 25, and this is with $5,000, but the same thing applies whether it's, 500 or whatever you're working with, right? Just do the math to break it down. So you could mark it to where it's 2,500 into Ethereum, the 1,000 into Near, 5 or 250, 250, 5, 1,000. Why am I messing this up? 5,000, you could do 2,500 there. I would say because this is safer, I would actually put in more on the downside, or I do everything equally at 5,000. So I would either do or everything equally at 1,000. So 1,000 split, 5,000 split evenly, 1,000 each, or I would actually put in maybe something more similar to like 1,000, 1,000, 500, 500, and then do heavier on SNX, just because the protocol is already safer, and then that gives you more upside because it has the lowest fully diluted market cap. So you can make that, $2,000 go a lot further if it does hit a run. So any questions on those fives or the previous five? Again, this would be my less risk. If I had, 500 to 5,000, I'll split it up between these. However you see fit, obviously just making sure that you're aware of things with a higher fully diluted aren't going to give you as high as a return. And then the same thing goes for the more risk portfolio. The lower the fully diluted, the higher the return you can possibly get. Usually. That's how that works out. Any questions on any of that stuff that we covered there? No, looking good. All right. So if that's good, then I'll go ahead and move on to, this is the risk metric. I know that, I think all you guys are actually on the risk taker thing. So for the length of this video, I won't continue to go over like how it works, but just to kind of give a quick overview. So obviously we have the assets sitting here, right? The USD risk. Now this takes into account the total risk metric does, how does he calculate it? I tried to figure this out once before it. The total cryptocurrency market cap, I believe it's divided by each asset and their moving average. I'll have to find out exactly how it works again, but in more layman's terms, if it's red or the higher, closer color to red, it's going to be a no. And if it's under 0.5, you're supposed to DCA into it, right? So Ethereum is at 0.5. That means that this would be a DCA week. You would go ahead and put in, if today is Monday and you're checking and it's under 0.5, then you would go ahead and put in your allocation, whether it's 10 bucks, 20 bucks, 100 bucks, 500, whatever that is, right? You have more and more upside, the lower the USD risk number is. So if you're looking at this and you're like, okay, what has more upside right now? Cardano or DOT? According to this risk metric, it would be DOT, right? Because it's lower, 0.19. So fairly easy there. You usually stop dollar costing average at 0.5. So for example, if I was DCAing Cardano right now, I would do it every week, every Monday, Tuesday, whatever day I chose, with the amount that I chose, all the way up until this gets to 0.5. Once it gets to 0.5, I sit on the sidelines, or I start moving that allocation into another coin that has not reached that 0.5 yet. So let's say I'm doing ADA and Link every Monday. I'm doing 100 bucks into each every Monday. ADA gets up to 0.5, Link gets up to 0.4. So now instead of doing my 100 bucks on Monday into ADA, I'm going to do 200 into Link, right? I'm just still putting the money in, but I'm putting it into an asset that is under my risk metric. And then usually look to take profits once you get to 0.7 and higher, right? So if none of them are high right now because of Bitcoin being so low. But if Cardano goes from 0.22 to 0.5, I stop putting money in at 0.5, and then I look to take profits when it gets to 0.7. And that's just following the Bencoin risk metric. And then you would continue to do that, right? And then so when you see that's the USD risk, then you have the Bitcoin risk. So this is saying Ethereum compared to Bitcoin, Cardano compared to Bitcoin. So some risks are going to be higher than others, right? The USD risk for AVEX is pretty low, but if you're comparing it to your Bitcoin dollar amount, then it's pretty high. So that's the basics, how you would look at that really quick. It's pretty customizable. You can go in here and move things around, do whatever you want to do there. Tools.
With this risk dashboard, I don't want to fully say would it negate the use of charting, but does it? Like does it negate the use of having to, you know, track the charts in depth the way that we're accustomed to doing, like in TradingView?
Well, yeah, this is just a brainchild of TradingView, right? It's all the same data, but it's just, this gives us the data right here where we don't need to go through the charts. We can just say, hey, is Bitcoin risky? Well, according to the Bencoin metric, no, it's not that risky at 0.365. It's under 0.5, so we will be buying. So yes, it does in that sense. And then you can kind of come into this tool with this weighted risk metric. And this is kind of what you were looking for as well, Barry. And you can see with your risk portfolio of like what you want to add, what you want to have in here, what you don't. And then you can determine, hey, is my when is it time to sell, right? Like when do I need to sell? So for example, if you have stuff in here and let's see, change this to 10. So Bitcoin's making up 94% of your portfolio and you only want it to make up 50%, it's probably time to sell, right? Easy enough there. But also it'll give you the current risk metric. So if something, this is where you can use this. If does anything have a high risk metric right now? I wouldn't know. So if something had a really high risk metric and it was like 0.7, 0.8, 0.9, that means it's extremely risky. It's most likely going to come back down and it's making up a large amount of your portfolio. It would be pretty silly not to sell some of it, right? To take some type of profits.
Right.
If you have something in the risk metric above 7, now for me, I'm more risky. When I first learned about this tool, I thought it was awesome, but I waited till 0.8 to take profits, which is cool. That was my risk level. Some people wait till 0.9. Some people take them at 0.65 to 0.7. So once you understand your risk better, you'll be able to adjust it to it. But this is huge for if the risk is higher and it's making up a large amount of your portfolio, it would be wise for you to look into that. Here's another. So some things are new on here. I used this service for a while, and then I kind of just fell out of it, trying different other services and whatnot. And it was a little pricier, $130 a month. But this is new. This strategies dashboard. So we can play around with this as we go. I need to kind of go through everything and make sure I understand fully before I'm trying to teach it and preach it onto y'all. But pretty easily the way he does his risk metrics. This logarithmic regression band is really cool. I've shown this before on some of my earlier charts. This is just the heat map, pretty basic stuff here in green. The premium videos, tap in and listen to the premium videos. That'll give you a better idea. So they're all right here. It's pretty dope. Premium reports, the quantitative investor. So I would read through these sometimes, but I honestly didn't read through them too often. But there is good stuff in here. It's just kind of like higher level, so just be aware of that as you go into it. But the premium videos are really solid. Check those out. Let me see. Into the charts. This would be good for us to talk about in the future inside the risk taker channel in the Discord, right? So mention these charts. Hey, I was checking out the historic risk levels chart and I seen that, so these are on-chain metrics. I seen that current Bitcoin risk is only at 0.366 while the price is at 39K. So what does that show us? That shows the risk is pretty low right now to get into Bitcoin. If we look at, and look how long these go back to 2010, the risk metric has been making higher lows. So we had, you know, our low, a higher low, higher low. And this is a little like kind of wick that I don't know how legit that is. Higher low, higher low, higher low, right? So even on the risk metric, we're still in an uptrend. We're still making higher lows. So historically, it looks like when Bitcoin is around about 0.3 risk, what was the price last time when Bitcoin was at this exact risk level? So let's see here, it's here. So the last time Bitcoin was at this risk level, the price was 7,000. So it can give you a little bit of better idea of like, oh, okay. So imagine buying Bitcoin at 7K. Well, the people that bought, you know, Bitcoin at 7K were buying it at a risk level of 0.3. Similar to the people that are buying Bitcoin right now at 30 to 40K are buying at close to a risk level of 0.3. So it does give you a different perspective on the market. And like I said, give me like a week or two to go through all these and kind of break it down, and I can put it in a more digestible way for everyone to understand. But that's really what I wanted to cover, guys, today. I just wanted to touch on, you know, trying to move risk into our thought processes here as we go forward. So I don't know, do we have any questions on anything we talked on? Anything else you guys want to go over?
Great breakdown, man. Great breakdown, man. Thank you, as always.
Yeah, no problem at all, my brother. Appreciate y'all tapping in with me on a Sunday. Could have been anywhere in the world, but you're here with me. All right, guys. Well, I did record this one, so I'll go ahead and stop sharing now. I'll stop the recording as well.